Are you ready to learn the secret to paying off your home faster than you ever imagined? If you're tired of seeing that mortgage statement month after month, you're in the right place. I'm going to share several proven strategies that could easily shave 5 or maybe even 10 years off your mortgage. But what if I told you there might be a bold, innovative, and simple way to pay off your house in just 5 years, and maybe less than that? Could Bitcoin hold the key to financial freedom? Imagine leveraging this cutting-edge strategy to crush your mortgage in record time. It sounds crazy, right? Or is it genius? You're about to find out. And with Bitcoin surging over $100,000 for the first time ever late last night, 2025 could be a wild year. Let's start with some proven strategies for paying off your home faster. Option number 1, make biweekly payments. How does it work? Well, most 30-year mortgages are structured with monthly payments where a portion goes towards interest and the rest goes towards your principal. The sooner you reduce the principal, the less interest accrues. By splitting the monthly payment into 2 smaller payments made every 2 weeks, you end up making 13 yearly payments instead of just 12. This extra payment goes entirely towards reducing the principal, accelerating the repayment. And smaller, more frequent payments reduce the loan balance faster. Since interest is calculated on what you owe, less interest accrues over time. This creates a compounding effect that accelerates the loan payoff. Not to mention, paying bi-weekly aligns with a lot of people's pay schedules. This makes it easier to budget and to stick to a plan compared with saving and then making extra payments. If you make bi-weekly payments on a $300,000 30-year mortgage with a 6% fixed rate, you'll pay off the home 4 to 6 years faster. Not only that, this strategy saves tens of thousands of dollars in interest. In this example, you'd save $45,000 to $60,000. Option 2, refinance to a lower interest rate. Because home prices are expected to continue increasing, Dave Ramsey said this:
"We know house prices are going to go up, so let's buy. If interest rates go down, you can always refinance. You're not stuck, but you are stuck with house prices. So buy now."
Refinancing your mortgage to a lower interest rate can help you pay off a 30-year loan faster by reducing the interest that you owe and potentially allowing you to make higher principal payments. How does it work? When you refinance to a lower rate, your monthly payment decreases. On a $300,000 mortgage, going from a 6% rate down to a 4% rate reduces your mortgage payment by about $370 per month. Here's the kicker though. If you continue to pay the original loan amount after refinancing, the extra cash goes directly towards the principal. This greatly accelerates the pace at which the loan amount shrinks. You can pay off your home 5 to 10 years faster and save tens of thousands of dollars in interest. Option 3, the debt avalanche method. This targets your debts with the highest interest rates first, allowing you to save on total interest paid over time. This is a great strategy if you have other debts like credit cards, a car payment, a HELOC, and etc. Often the interest rate on your mortgage is lower than your other debts. So instead of trying to pay off your home first, make extra payments toward the higher interest portion of your debt. This reduces the compounding effect of interest. Once higher interest debts are gone, additional funds can be applied towards the mortgage principal. By focusing on the most expensive debts first, you ensure every extra dollar works harder. This will allow you to start paying additional funds towards the principal of your mortgage sooner. Option 4, the Snowball method. This focuses on paying off the smaller balances first. It's more psychologically driven, but it's still effective in reducing your mortgage timeline. Paying off smaller debts, such as short-term loans or lingering credit balances, builds momentum. This will create a snowball effect of larger payments over time. When the time comes to tackle your mortgage, you'll be more likely to accelerate your payoff. Option 5, put windfalls to work. When most Americans have extra cash, they spend it. It's sad, but true. So instead of buying something that you really don't need, apply your windfalls towards the principal of your mortgage. When you apply a lump sum windfall, such as a tax refund, bonus, inheritance, and etc., to your mortgage principal, it immediately lowers the amount of which the interest is calculated. Unlike regular monthly payments, which are split between interest and principal, it's a direct principal payment which focuses slowly on reducing the loan amount. A lower principal balance means that future interest accrues on a smaller amount, creating a compounding effect that accelerates the mortgage payoff. For example, if you reduce your balance by $10,000 early on in the mortgage, you'll avoid paying interest on that $10,000 for the remainder of that loan term. And the strategy doesn't require that you alter your budget. You're leveraging unexpected income to make additional payments. Even a few small contributions can have a significant impact. And the earlier you apply your windfalls to your mortgage term, the greater the impact will be. Since mortgages typically compound monthly, Every dollar that you remove from the principal reduces interest immediately with exponential benefits over time. On a $300,000 mortgage with a 6% interest rate, if you apply a $10,000 windfall in the 5th year, you could reduce the loan term by approximately 2 to 3 years. Consistently applying annual windfalls of $5,000 might reduce your 30-year mortgage down to 20 years while saving you tens of thousands of dollars. Option 6, using the 10% rule. This involves paying an additional 10% of your monthly mortgage payment towards the principal each month. Reducing the principal decreases the amount of interest that's accrued over time. This compounds the savings with each payment. This shortens the repayment period without significantly increasing your monthly expenses. This strategy will reduce your 30-year mortgage by 4 to 6 years. Option 7, living below your means. This allows you to free up extra cash that can be applied directly towards your mortgage. By consistently paying even small amounts above your monthly mortgage, you'll reduce your balance faster, saving thousands of dollars in interest over time. For example, paying an extra $200 per month on a $300,000 mortgage at 6% interest could cut the repayment term by nearly 7 years. And you could save approximately $83,000 in interest. Data has proven that using any one of these strategies will knock 3 to 10 years off your mortgage. That's great, but what if you could use a cutting-edge strategy to pay off your home completely in just a few years? This brings us to option 8, cryptocurrency, aka Bitcoin. If you're not on the train, you're going to miss out on some massive gains. As a matter of fact, you already have. If you don't get it or you don't think Bitcoin is real money, you should know that Bitcoin can be used to buy goods, pay for services, and be exchanged for traditional currency. It's recognized worldwide as a legitimate form of currency. But the US dollar is declining in value while Bitcoin moves higher. Let's talk about how the Bitcoin strategy may be able to help you pay off your house much faster than the traditional routes. As you know, when you pay extra towards your principal, you're reducing the debt and saving money on interest. But holding Bitcoin has historically been better than paying down your mortgage, even if it has a high interest rate. By investing in Bitcoin instead of paying extra towards your home, you could grow your money much faster. If Bitcoin's value grows significantly as expected, you could use the gains to pay off chunks of your mortgage. Let's look at the numbers. If your loan amount is $300,000 with a 7% interest rate, and you applied an extra $1,000 towards your payment yearly, this would save you $20,000 to $30,000 in interest over the life of the loan. But how does it stack up against Bitcoin? The Robinhood app shows that Bitcoin is up by more than 150% this year. And over the last 5 years, Bitcoin is up by more than 1,300%. In a side-by-side comparison, over a 5-year period, a $1,000 yearly investment would save you $5,820 in interest, while Bitcoin, if it only had an annual growth of 60%, would equal $32,582. The Bitcoin strategy could net you $27,000 more than paying additional funds towards your mortgage. Bitcoin is the clear winner, especially when you consider that I only used a 60% growth rate as opposed to the 150% growth rate that Bitcoin has had in the last year. Now, this is not financial advice. I'm not a professional money manager or an accountant or whatever, but I've been investing into crypto for several years, and I still haven't paid off my house. Why? Because I would have to sell my Bitcoin and other investments tied to Bitcoin, and they're simply performing too well. At some point, I will just pay off my house, but right now I just want to keep my investments right where they are so they can continue to compound. Bitcoin, like any other investment, comes with risk, but it has increasingly established itself as a reliable asset. Its adoption has surged in 2024, with major corporations like MicroStrategy accumulating insane amounts of Bitcoin. And then you have BlackRock, who's leveraging Bitcoin ETFs, which are designed to reduce the volatility and offer regulated access. These ETFs have launched just this year and have brought in billions of dollars, enhancing Bitcoin's liquidity and stability. Furthermore, nations and large corporations are adopting Bitcoin as a reserve asset, with countries like El Salvador leading the way. And did you hear what Donald Trump said about Bitcoin?
I am announcing that if I am elected, it will be the policy of my administration, United States of America, to keep 100% of all the Bitcoin the U.S. government currently holds or acquires into the future. We'll keep 100%. This will serve in effect as the core of the strategic national Bitcoin stockpile.
If Donald Trump created a national Bitcoin reserve, the price could go parabolic. This growing adoption, coupled with global interest in using Bitcoin as a financial and strategic asset, underscores its legitimacy as a currency and a store of value. With its limited supply and increasing demand, Bitcoin is poised for long-term appreciation, making it a compelling investment. Here's a quick example. Let's say you just purchased a house and you have an additional $25,000 in your bank account. If you have a 30-year mortgage with a 7% fixed interest rate, applying $25,000 towards your loan could save you over $80,000 in interest and pay for your home about 5 years faster. In contrast, investing $25,000 in Bitcoin at a price of about $96,000 with a 60% annual growth rate could grow to $300,000 in 5 years. Yes, cryptocurrency can be volatile, and the assumed growth is speculative. But once again, the 60% growth rate that I used is much lower than the 150% rate this year. I mean, what if Bitcoin continued to grow at only 2/3 of what we've seen in 2024 at a 100% annual rate? Your $25,000 investment would double every year. Here's how quickly it would grow. In year one, $25,000 would become $50,000. In year two, that'd become $100,000. In year three, it becomes $200,000. In year four, that becomes $400,000. And in 5 years, it would be $800,000. In just over 3.5 years, it would surpass the $300,000 that you owe on your home. And if you leave your investment there, it could reach $1 million after 5.32 years.
That's what I'm talking about!
I know this sounds cray-cray, or maybe unbelievable, but when you consider past performance as well as potential for mass adoption, there's a decent chance that this scenario that I provided is a worst-case scenario. I mean, can you imagine a life without a mortgage payment? Not to mention in 5 years or less? Once again, I am not telling you what to do. I just want to present another option that I really haven't heard anyone else talk about. It's an option that could change your destiny. I'd love to hear your thoughts. Do you think this is the worst idea ever, or is it something that you'd consider? If you're currently doing this or something similar, please leave a comment below. I want to hear from you. If you're wondering what will happen with housing over the next 4 years, you'll want to watch Will Donald Trump Make Homes More Affordable? Look for that link below. If you're looking to buy, sell, build a home, or invest in Utah real estate, I get contacted all the time. Please feel free to call or text me with your questions. I'd love to meet you, and I'm honored to serve you. If you know someone who's wanting to pay off their house fast, you can easily text this video to them. Remember, you can find me on Instagram at Ty the Real Estate Guy. If you found this information helpful, please give me a thumbs up. Thanks for watching, and don't forget to hit the subscribe button and ring that little bell below. It'll make you feel good.